earnings conference call of Subex Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note this conference is recorded. I would now like to hand the conference over to Mr. G.V.K. Krishnakant. Thank you, and over to you, sir.
Thank you very much. Good morning to everyone who have joined the earnings call for the period ended September 30th, 2021. Now I'd like to introduce the members of the management who are present on this call. Along with me, I have Mr. Vinod Kumar, Managing Director and CEO, Mr. Venkatraman GS, Chief Financial Officer of the company. I would like to start the conference call by going through the safe harbor clause. Certain statements in this call concerning our future growth prospects are forward-looking statements which involve a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. The risks and uncertainties relating to these statements include, but not limited to, fluctuations in earnings, our ability to successfully integrate acquisitions, competition in our area of business, client concentration, liability for damages in our contracts, withdrawal of tax incentives, political instability, unauthorized use of intellectual property, and general economic conditions affecting our industry. So with this, I now hand over the call to Mr. Vinod Kumar to take it forward. Over to you, sir.
Good morning, everyone. Thank you all for taking time for this call. I hope all of you and your families are safe and doing well. As you would have seen from the results announced yesterday, the revenue for the quarter stood at rupees 86.3 crores, EBITDA at rupees 9.9 crores, and PAT at rupees 4.8 crores. This quarter has turned out to be one clearly below our expectation. The overall financials are not looking good, as there is a dip in the revenue when compared to Q2 of last year. But the primary reason for this dip is that we could not initiate some major projects in the Middle East region. As we updated in our projects, the customer is supposed to provide us the infrastructure to start the project. Recently, one of the prominent Hadoop vendors had a change in the pricing strategy and changed from a free open source to a full license-free model. Now, this has resulted in customers needing additional budget to procure the infrastructure, and as telcos being big organizations, it has taken time for them to secure the additional budget for the overall project. While this is not an issue created by Subex, it is having a knock-on effect on us with delays in initiation of one projects. We expect these customers to sort out this issue through this quarter. Further, the pace on some of the ongoing projects also have been slow due to the challenges of remote implementation. As we have updated, we have started some new projects last quarter, and while on some of the existing projects, considering the fact that we have finished the data gathering, etc., once we finish the data gathering, we can proceed at a pace. But during the data gathering phase, as is it new to many of our new customers who are starting new projects, it is definitely taking more time than what we originally envisaged. Overall, this resulted in a low implementation revenue, and that had an effect on the overall revenue of the company. Now, having said that, the order book is intact, and the emerging markets, particularly of APAC and Middle East region, is doing very well. The H1 order booking is 38% more than that of last year. While we do not want to give any specific guidance from a full year perspective, we expect the order booking to continue to be robust in Q3 and Q4. On the cost side, Venki will subsequently provide further clarification. Coming to the portfolio update, during the quarter, we launched Hypersense AI Studio on a SaaS option to engage the wider user community. The projects on Hypersense are progressing well, and we plan to start more projects on Hypersense once the current project reaches a stage that validates platform stability. We also expect the rollout of fraud management and RA modules on Hypersense during this quarter. So overall, Hypersense rollout and customer adoption is progressing as per our plan. Incidentally, we also won the Pipeline Innovation Award for Hypersense. This is a prominent global award presented in the telecom segment. I also want to bring to your notice some remarkable work that we are doing along with TMF on our core areas. Subex is part of an innovative TM Forum Catalyst project championed by Verizon and Colt. These are major telcos to revolutionize B2B2X business model on the 5G marketplace. In this catalyst, our AI-based capacity management solution will solve the quality of experience and versus quality of service-based predictive analytics capabilities for network slicing using cases like connectivity as a service, which will be very, very prevalent and predominantly the use case that is going to be in the 5G environment. The second catalyst project is around measurement of trust in AI environment. In this project, Subex will build a framework and toolset to enable enterprises to build trustworthy AI models. This project is supported by Axiata Group. An outcome of this project will be an AI trust measurement framework along with a required toolset to measure and quantify AI model with a trust score, which then will help consumers to understand the challenges in any AI model. And as the trust score gets lower, then the intervention can be done and make the corrections in the algorithm so that the trust score comes up again. This is a significant development, and we expect this to be the standard framework on AI, on trust in AI going forward. Both these catalysts won awards in the respective categories in the recently concluded TMF award ceremony. Only 9 catalysts among the total of 41 this year went on to win an award, and we won 2 of them. Further, as we already announced, that we also were granted the patent on revenue management in the handset. Now, as the compute moves more and more to the edge with 5G and IoT, the capability to manage revenue management at the edge will be very important to prevent both customers and subscribers from fraud and other nefarious activities. Coming to the new areas of IoT/OT products, we have a new identity for it. It was rebranded as Sectrio, indicating the triad of coverage of IoT, OT, and IT. We are progressing well on adding the OT capabilities and have significantly improved the threat intelligence detection capability of our honeypot network. The new GTM approach of going via distributors and channel partners are increasing our reach, and we have signed up key distributors in North America, Middle East, and India, which is our current focus markets. On ID Center, the uptake from onboarded partners are increasing as per our expectation. As you recall, this is a SaaS business where our revenue will depend on the uptake or number of API calls they make into our platform. We expect to more than double the number of customers during the quarter. This whole business is getting into the profile of a fast-growing SaaS business, which is precisely what we wanted. Also, we are proposing a restructuring wherein the business carried out by Subex Assurance LLP will be transferred to Subex Limited. This is primarily done to achieve higher operational efficiency upon integration and consolidation of the business in the listed entity. Venki will further elaborate on this. Coming to the people side, as we have announced, Venki, our CFO, will be moving on to pursue some opportunities outside Subex. We have initiated the search for the backfill, and I'm working very closely with Venki on this transition. While the Q2 results have definitely not been in line with expectation, The lead indicators of our business, specifically the order book, remains to be strong and better than last year. Our focus continues to be on execution of digital transformation and thereby unlocking possibilities for all our stakeholders. We look forward to your continuous support. Thank you, and I will now hand over to Venki to clarify on a few points.
Sure. Thank you, Nal. Good morning, everyone. Maybe I'll first talk about the restructuring which has been approved by the board in this meeting yesterday, and then talk about some of the specifics around the costs in the last quarter. So I think what we're looking to do is do a slump sale of the Subex Assurance Energy business into the listed entity Subex Limited, which will enable us to reflect the core business which we have in the listed entity, and also help us drive certain operational efficiencies as part of this exercise. So that is the purpose of this exercise. It will have to go through the required regulatory approvals before this can reflect in the listed entity's financials. So we are working through to get those approvals in place, and we'll continue to keep you updated on the progress we make on these clearances. So that's the approval which the board made. On the performance for the quarter, I think Vinod already spoke about the revenue and the EBITDA margins for Subex on a consolidated basis. A couple of things I wanted to call out. I'm sure some of you would have absorbed that. I think our employee benefit expenses have gone up from 51 crores in the last quarter to about 54.4 crores, primarily due to two factors. One, we wrote out increments for our existing for all Subexans up to a certain level in July of this year. So the impact of that increments are reflected in the increase in the employee benefit expenses. And you would also see a reasonable jump in other expenses from 13.3 crores to 21.98 crores. This is primarily on account of two or three factors. One, we had a forex loss this quarter. We had a forex loss of about 1.5 crores versus a 2 crore gain last quarter. So that's about a movement of about 4 crores on a quarter-to-quarter basis if you were to look at a movement. And then we also had, we've also stepped up some of our other activities, given that we are seeing the movement in the market and we are also seeing some traction. So some of our marketing and travel-related spends have also gone up. So that has also led to about 2.5-3 crores of costs going up compared to the previous quarter. And in the first quarter, we had also cleaned up some of the provisions we were holding for specific things, which is about 2.5 crores. So all of that has led to this 9 crore kind of a swing between the quarters. Nothing unusual in terms of the way these costs are. Obviously, the big ticket item is forex, and forex is a function of how the currencies move. In our case, the dollar strengthening to euro and GBP had the biggest of impact on the 1.5 crores of loss we reported for the quarter. So primarily on account of the forex movement and a few other cost increases we have stepped up given the traction in the market we are seeing has led to the increase in cost. Otherwise, I don't anticipate any significant increases in our costs going forward.
Okay. Thank you, Venki. Now we can move to the questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to restrict to 2 questions per person in the initial round. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 in your telephone keypad. Our first question from Ashish Koti, individual investor. Please go ahead.
Thank you. I wanted to ask, sir, with regards to the one-time sell-off loss in LLP. I think I had missed out your earlier conversation. So if you have already discussed that, but I would request you to just share that. And what is the purpose of still maintaining a LLP structure? Because that does not give a clear overall clarity of performances as well as activities being done. Thank you.
I think I didn't pick up your first part of the question. What is that one-time thing you spoke about?
Not one time. The loss in LLP.
Loss in LLP? You're talking about the digital LLP?
When I was looking at the results, there is a loss of, if I'm not wrong, 9 crore of loss or something in LLP. One of the LLP.
Okay. So I'll start that. All right. So the loss which you are referring to is the digital asset. So all our new businesses, be it IoT, OT, security, or the ID sector which Vinod spoke about, all of them are currently under the Subex digital LLP umbrella. So as we know, right now we are in the investment phase for some of these newer areas. The revenue momentum for them is picking up, and Vinod will provide updates in terms of how we are seeing traction in ID Central and IoT, OT securities as well. So to the extent the revenue momentum has not yet picked up, those are in investment mode, which is why you are seeing losses in the Subex digital LLP. On the second part of the question, what is the need for LLP? I think these LLPs were carved out 3.5 years ago for a very specific reason in terms of how we wanted to look at the business. In terms of having two LLPs, one focusing on the core business and one focusing on the new. But then we've also realized that the core part of the LLP which we had carved out at that time, while it has given us some benefits, but we are now looking to see how do we consolidate them back into the listed entity, and that is the first step we did yesterday, where the board has approved the slump sale of the SA LLP, which is our core, the LLP and which the core business is housed, is now coming back into the listed entity. So we will continue to keep looking at the structure and see how we can optimize. But as you can imagine, some of these things, once you have created, unwinding them does take time. So therefore, we will have to do it gradually and in the most optimal manner, considering all angles in the statutory, regulatory, tax and other.
Another question, sir, is with regards to constant selling, which is being done by the major shareholders. Now, though it would always be considered as an investment decision by the concerned entities, it also raises doubt in terms of do they not see the further growth in coming years while we are talking about new technology, new platforms, new businesses. So are they not seeing the growth per se, and that's why they are selling out?
Look, I think that's a difficult question for us to answer as to what is there beyond that. But as far as our view, we are very, very clear that we are at a point where all the three new areas that I listed on security and identity analytics and hypersense, all of them are in a position where the market validation is there. And as Venki mentioned, we are stepping up the investment for the business development so that we can scale those things and make it into a mainstream thing. So we remain very committed and very positive on the outlook and the prospects for these new areas that we are working.
And actually, just to clarify, I think these are some of the insiders who are selling are our employee shareholders who have got these options as part of the whatever employee stock option program. So these are by no stretch of imagination major shareholders. Yes, they are insiders, but then we also have to recognize all of them will have their own investment views and needs for cash at various points in time. So to read too much into that, I wouldn't read too much into it because I think we need to see the larger picture the way the company is looking at the business.
But sir, ICANN has been selling for quite some time, and they've reduced their holdings maybe now just to a minuscule 1.13% or something. That's my concern.
I hear you, but ICANN by itself was never a very large shareholder, right? It is about 1.5%, which maybe they have brought it down. So, and those are
no. Sir, sorry to interrupt. Earlier they were holding more than 3 or 4% down the line. Say 4 years back or so, 3 years back. I could be wrong. My reading could be wrong, but what I recollect is I think they were holding 3 to 4% or maybe more, which has come down to 1. And when the company is going on a growth trajectory, major move is happening now. Technologically, new advancements, new offerings, and that's why investors are gung-ho about Subex. And in that scenario, that raises the question. And I suppose CFO sir is also moving out.
Look, I think these, as you can appreciate, while individuals take a call on this matter, but I would want to reiterate again what I said. My view and the management view on the prospects of these things are quite robust, and we are, as we talk, stepping up our investments on these new areas because as we see the market, as I've told you, maybe by the end of the year we will be in a position to provide you the specifics of the profile that we are talking about, saying that ID Central and IoT are getting into the profile of business that we wanted, which is primarily the ID Central being a SaaS-based profile and the IoT being a distributed channel-based profile. So we are getting there. We are very, very confident and we are setting our investments. Now, there are personal reasons, there could be other reasons, but as far as the company and our views concerned, we are consistent that we see this opportunity as very real and we are quite bullish on the prospects of these products going forward.
Sir, I requested for in earlier meetings also. Just one second. Just one sec. Just please.
Go ahead.
Earlier, I had requested for on the world canvas major competitors on our new products offerings and new platforms. So I was told that it will be shared later on in next 1 or 2 meetings. That these are the main major competitors vis-a-vis us, and where do we stand compared to them. I would really appreciate because we are also new to many of the things. So for us to understand the industries also would take time in new products.
Sure.
And sorry for asking too many questions.
No, that's fine. Look, I think I can provide an update on that. When it comes to security, our major competitors today are a company called Clarity. This is from an Israeli company, and another company is Subex. So these are the two companies that are competing with us in the specific area of OT, IoT at this point in time. There are many others planning to get into this space because this space is definitely getting hotter. When it comes to identity analytics, as we said, we are working today in the two markets of India and Indonesia. We have many smaller competition, but as it is redefining as we talk, and probably maybe in the next call, because there are so many, not somebody I can call out as talk as a global player. It is an emerging space as we talk, right? So we will be able to share you because it's very early. So it's not that we are not even competing in many places one-on-one with others. It's that earlier stage, but it is evolving. With respect to Hypersense, I think we have 2 large competitors which we can consider as a competition. One would be Alteryx, and the other one is DataRobo. These are the two players that we consider as competition. There are others also that are emerging. So all these things are emerging spaces, and these are some of the competition that we have started competing with them in some of the opportunities. We will also provide an update on some of these things next time going forward in our investor presentation.
Thank you, sir. Our next question from Mr. Deepak Chauhan from Rate Capital. Please go ahead, sir.
Hi, thank you for this opportunity, sir. Just to extend the question about the HNIs exiting, including some of the top management, I'm not pointing fingers at anyone, but it seems like these HNIs and some of the management were aware of what is coming, which is why probably, again, I'm saying I'm not pointing out, but this needs to be noted down somewhere. Probably these people were aware of what was coming in September. That's my question number 1. I don't need any answers on that, but on behalf of retail shareholders, that's a suspicion we guys have. My second question is, sorry, you want to say something on that?
Go ahead. No, go ahead. I'll complete your question, then I'll come back.
My second question is, in spite of your best efforts, sir, I'm not doubting on the management capability, but for some or the other reason, our top line just doesn't grow. Is it a right time for us to probably merge with a bigger entity or a completely different corporate entity?
Okay, so let me take the second question first. As we said, that there is the result is definitely not in line with our own expectation, and we are correcting that situation because, as I said, the order books are in place. We have the backlog. It's just the conversion that we had some challenges, as I explained in my briefing. Now, as I said, the lead indicators are quite robust at this point in time, and if we continue that in Q3 and Q4, we will definitely be in a better situation with respect to the order backlog, and then the focus should be on conversion. Now, we definitely have some challenges with the conversion based on what I mentioned, with the customers taking more time than what the original envisaged for us to initiate the project and complete some of the projects and things like that. There's a lot of dependency from customer for us to complete the project, particularly the newly initiated ones. But I guess those will get sorted out as we go through, and revenue will start going up. And then probably, obviously, I think till that time I can only tell you that I can only talk about the lead indicators, which is probably what will get converted into revenue as we go along. Now, one thing that you mentioned about some of the employees selling, etc. I just want to also to
it's not only employees, sir. It's the top HNI. If I compare the shareholding pattern of June versus September, sir, all the HNIs have disappeared. My question is, did they probably get some hints that what's going to happen in September? So that's
absolutely. So let me clarify. Absolutely not. We have whatever we have had a discussion with all the investors that has been listed, that has been notified on the same day to the stock exchanges. So there's nothing beyond that. We have had any discussion whatsoever with anyone. But let me also take to clarify about the employees thing. Now, we do have a ESOP schemes where, based on the vesting and based on some of the requirements for exercising, people had to cough up some money, and therefore there was some liquidation that was required for them to get this more ESOPs before the exercise period is over. So there's some movements on that front, but other than that, I think by and large, as far as from a compliance standpoint, we are absolutely clear that we have the same briefing, and as soon as we have any kind of investor activity that is updated to the stock exchanges on the same day, we have the discussion. There is no other discussions or information of any kind that we are having with anyone.
Okay, is it that the worst is over for the company? Because we keep hearing that the next quarter will be better, the next will be better, but I mean, and that's what we were guided by, and that's what I was trying to link, that we retail investors were guided by some positive assurances in the last call, whereas if you see the shareholding pattern, these HNIs went away, and here we keep getting assurances from the top management that things are good, next quarter will be better, H2 will be better, but it just never happens.
Yeah. Look, I think I'm giving you all the stats with respect to the lead indicators that we have, that we had an order booking which is 40% higher than what we did of last year. Our backlog is intact. So that all points to things looking good going forward. So I'm not giving any assurance beyond that, but I'm just providing you the facts that we have closed, that the order intake, order booking, which is a lead indicator for the revenues to come, was strong, and we had, compared to last year, it was almost 40% over what we did last year.
Okay, thank you, sir. Look forward to better performance from next quarter onwards. Thank you.
Thank you.
Thank you, sir. Participants are requested to restrict to 2 questions per person during the initial round. The third question from Mr. V.P. Rajesh from Banyan Capital Advisors. Please go ahead, sir.
Hi, Vinod and Venki. Hope you guys are well. Just a question on the MRR for the Horizon 2 products. So for IoT and ID Trust, etc., what was the exit rate at the end of the quarter?
Okay. So Rajesh, on the two aspects. One is on the let me first start with the ID Central kind of thing. So our current ARR for ID Central is trending at about 150 at this point in time, and our expectation is that we will have that almost 3 or 4 times doubled by the next 2 quarters. So that is our current expectation, and the profile is building up that, because at this point in time, after we onboarded the initial few customers, our focus was to stabilize the platform, and they are adding, and we have not added more customers because we were stabilizing the platform, and these customers who are onboarded, their volumes have gone up from what we started to almost 500% when we started. As you know, that is our API pulls, and based on every API pull, we have agreed on a revenue. So we have seen a 500% increase on the API pull from the existing customers, and Damodar's platform is stabilized, and our next effort is to increase the customer onboarding, which we will looking at more than doubling the onboarding of number of customers every quarter going forward. And our expectation, as I said, Rajesh, is that we will almost, get to about very, very close. We are working towards getting to the first milestone of a ARR of $1 million for the ID Central business. Now, coming to security business, with the transition of this moving into the OT side of it, the profile is not fully on a SaaS-based model. We have a mixture of both CapEx and the OpEx there. So those details I will provide you as we get into. As I said, we'll provide the details of both the businesses as we get into the end of this year, Rajesh.
Okay. And my second question is regarding this restructuring. So I believe you are only restructuring one of the 2 LLPs, and the second one will continue. Is that correct?
Yes, that's correct, Rajesh.
Okay. And so the idea of getting some strategic capital in the digital LLP, is that still on? Should we conclude that, or you are signaling that perhaps that is also iffy at this point in time?
We will time it at the right time. We would hold that till we get to a particular revenue side based on some of the guidance that we have got from the market and some of the experts in this area, Rajesh. So the plan is on, but from a timing perspective, we would wait to get to a particular level of ARR before we pursue that again.
Understood. And Venky, all the best for your next venture, and hope to stay connected. Take care. Bye-bye.
Yes, sure, Rajesh. Thanks a lot.
Thank you, sir. Our next question from Mr. Sanjay Shah from KSA Securities. Please go ahead, sir.
Yeah. Good morning, gentlemen. Thanks for the opportunity. So my question was regarding this quarter performance, where the reason what you cited. What do you see that going ahead? And what about, have you lost any market share in any of our verticals, or have you failed in any of the new verticals where we are venturing?
Okay, thank you. We have not lost any contracts. It is just that it is delayed. As I told you, they are figuring out the additional budget for the infra in some of the cases, and there's been some delay. So the contracts are not going away, just that it is getting delayed from an execution standpoint. On the new areas, I think the market is just getting developed rather than going. So we have not lost any market share or anything at this point in time. And in the 2 regions, particularly in the emerging markets of APAC and Middle East, we are competing very, very well. And other markets, we are just sort of opening up, and as the new projects are coming in, we are engaged with our new product portfolio. And that's why we are significantly increasing the business development, both with people and marketing. We have stepped up our thing. So as I said, that's the higher OI, etc., is a result for that, and we expect in Q3 and Q4 for this to continue.
Appreciate. So my second question was regarding our transition on SaaS platform. The business is Hypersense and that IoT security. Can you highlight more on that, how it is transition is and what opportunity you see on that side?
Okay. So there are three specific products that we are taking in that direction. One is ID Central. It's completely transited SaaS from day one. It's, as I told you, it's getting into the profile of a fast-growing SaaS business. Now, with respect to Hypersense, we are doing three projects at this point in time. It is getting into a stage of completion, or rather completion of phase one of the delivery, and we are waiting for that to happen, the entire load to be pumped in so that the platform stability can be verified and validated. And there are other upgrades that we have already secured. So as soon as we have this stage reach, we will get other projects also move into this mode. Now, with respect to specific Hypersense, the conversion of some of the existing existing license-based business to the SaaS, that's a work in progress. I would not say that we have kind of already succeeded in converting all of our customers. No, it's a slow process. We are now looking at a blended model where some part of the solutions which they already have the license can remain as this thing, and there are some part of the platforms will be on SaaS-based thing. So those discussions are happening with the customers, and as we onboard the customers, slowly things will happen. So I guess all the new contracts that we are securing from Q3 and beyond. So from start of this quarter, we are only securing new contracts and upgrades for Hypersense. So everything going forward will be on Hypersense. Now, most of them, we expect them to convert into SaaS. Some will remain in an on-prem model based on the sensitivity of data and some of the customer telco-specific requirements. But it will take a while for us to convert every customer into the Hypersense and into the SaaS model. It's a work in progress.
So continuing that, is it that during that transition period we may lose some of the businesses or revenues?
There might be a change in profile of the revenue for a short term, but it's too early for us to factor it at this point in time. Most of our upgrades, we have all the secured upgrades that we have secured. We are not seeing any loss of revenue. But I think as we bid for the new projects, new RFPs that we have bid, all of them we have bid on a SaaS-based model. And when compared with the profiling of our existing projects with those projects, there will be a smoothening out of the revenue rather than the front loading of the revenue if you consider a 3 or 4 year term of the contract. So at this point then we are not seeing it, but as we start securing more and more new contracts, that is brand new contracts from customers, not upgrade ones, we will see that smoothening out. But our view is that by that time some of the new areas will start contributing so that overall we will not see sort of that kind of impact that we are expecting from the transition from a license to a SaaS thing. It's too early for us to take it. As soon as we have some more view on that thing, we will provide that. But at this point in time, the revenue kind of the dip in revenue compared to last year was not contributed by the SaaS conversion. It was primarily because of our inability to start some of the projects that we have won on time.
Great, sir. Wish you good luck. Happy Diwali to you all.
Thank you very much. Thank you.
Thank you, sir. The next question from Mr. Amit Mishra from Impex. Please go ahead, sir.
Hello. Am I audible?
Yes.
Good morning, everyone. Yeah.
Good morning.
So, enough discussions on revenue degrowth and insider selling. I would like to raise one issue that we have been talking about 10% or let's say double-digit growth since the start of the year. It was mentioned in Q4 and again reiterated on Q1 con call. It was 10th August, so it was mid-quarter already. I want to understand what happened to that guidance of double digit and what is the current guidance. So that's number one. The second question is there is significant increase in receivables and which reduce, of course, the operating cash flow. What happened there, and I don't understand sudden decrease, big decrease. And the third question is, we really want to see a matrix in the presentation for new products. It's absolutely essential. Now, Subex has been saying for 3-4 quarters that we will include that in presentation. We have never seen it. So I would urge the management to include this and make it transparent, basically, including employee attrition if you have any. So we need to be more clear, more transparent with shareholders. That's my questions.
Yeah. So I think as we have been maintaining that we will provide the view of the new areas when it becomes a sizable number, because at this point in time, that's our emphasis is to add more.
I'm sorry, Vinod. I understand the point, and we taken it on board for a long time, right? I understand that it's not up to the scale to report, but this needs to be transparent on quarter how you're doing, and needs to be published. This is not done waiting for 4 quarters to get a clear presentation on that.
Right. Look, I understand this thing, but I would want you to appreciate where we are coming from. I think, as I said, we would want to
totally registered for last 3-4 quarters.
So once we get into once we get into a profile, that's what I said. By end of this year, we definitely think that, and I'm talking about the end of this year for ID Central, we will get into a SaaS profile, and we will be in a position to provide you that details. Because at this point in time, we are only adding customers. Our emphasis is to add customers, get their usability fixed, get us the feedback, we get the product better before we scaling. So that's our focus, and that's so adding users. Let me put it that way. Not even paying customers, getting users. That's our focus on the new area. Now, coming to the first aspect of the guidance perspective, I just want to clearly call out that at this point in time, we are not giving a guidance. Now, the things have changed. I've already detailed as to what things have changed. This was not expected, and we have started on particular thing, and then this came in, and this was an uncertainty because some of the customers that we are talking about are very large customers having huge volumes of data. Now, you can imagine that infrastructure was coming free to them, and they had to only pay the support fee. And that too, support fees, we take the support. Many of them had the internal capability to support this free Hadoop infrastructure. Suddenly, the provider, one of the mainstream providers, changed the model, and they have to. It was licensed, which meant at that volumes, it was a large proportion of the overall budget that they will have to secure again for these projects to go ahead. So this was unexpected.
Sorry, Vinod, to intervene. So this happened post 10th August. I would like to understand this.
That's correct. That is correct.
August, you said, okay.
That's correct. So we did not expect that thing, because then we were not even comfortable to continue with the working unless we get a clarity, and then it was because it was a big amount. It was a sizable portion of the overall project cost. They have to cover the gain. And because the infra the license of this model is, and it's quite unsettling. I mean, while it is upsetting on one side, on the positive side of this is that this has also prompted some of our customers to look at Hypersense, because Hypersense was a viable alternative to the platform they were using. But the telco is very, very large thing, and they have a very large team supporting these products. It's not for the infra is not for our products alone. They have a common infra. But I guess that this will get sorted out, kind of thing. So while considering these things, I hope that most of these things will get ironed out during this quarter, and you will see that in the results. But I do not want to provide any specific guidance at this point in time. And as soon and probably the clarity that we have is on the order booking. That is clear. That I'm calling it out then that we are close to H1 with a 40% higher order booking, which would mean that will result into revenues going forward.
And just on the question of the 40%.
Yes, 40% over H1 of last year. Our order booking is higher by 40%, and actually 38% to be accurate.
38. And Amit, okay. And the last question. Sorry, Venki.
Yeah. The question on receivables, I think what happened is, I think there were a couple of invoicing which we were awaiting confirmations from the customer, and some of them spilled over to the current quarter. So it didn't happen before the end of the quarter. So that has resulted in the invoicing not happening. So it is sitting in the unbilled portion versus receivables. So as soon as we get that, we get converted to receivables in the coming quarter. So it is a one-off kind of a situation which has led to that. I think there's a bunch of milestones which you couldn't give.
You had all of us scared that when
Yeah, understand. So I think it is very much explainable. If you look at obviously you don't have the details of the breakup of the balance sheet, but a similar movement of increase has happened in the unbilled receivables. So it is in line.
Okay. And Vinod, you mentioned about ID Central ARR. Was it ARR or MRR?
The current ARR is tracking at 100K.
100K. Okay.
With a handful of customers. We have only a handful of customers, but I guess that but we have seen a 500% increase over the last 2-3 months on the update. We did not add too many customers because, as I told you, the emphasis was to streamline and stabilize, ensure that the platform can scale. Now we have done that. We will more than double the number of customers this time, and our next near-term milestone is 1 million ARR.
Okay. Just on the investors, it's not going really well. If we see, how SHP is the quarter versus quarter, we have lost many HNIs. We have lost even ICANN and Anaga, Mr. Anil Singh, the managed funds. So why can you just develop on that? Like what are you facing? Like why you are not able to convince the investors to buy in, because there's enough liquidity in the counter.
I think the fact that is that this quarter, particularly this quarter, where we are, we know, we have explained where we are, and our focus has been to look at how to support, particularly on the new areas where we think we are sitting on a huge opportunity. We are very bullish. We are more aggressive as we go into the market. And I presume that as we start executing and start reporting some of these around progress that we are making on the new areas, you will see that the profile is building that of a fast-growing SaaS company. So while all the activities that we are doing towards convincing or talking to the investors, we are reporting it. Beyond that, we are not having any discussions with any of the investors, as I clarified. But we are translating all of them, and our hope is that as we start providing details of some of these new areas, there will be much more interest on our counter than what we are seeing today.
Thank you, sir. Participants are requested to restrict to 2 questions per person during the initial round. Our next question from Mr. Prashant Sawant from Kailash International. Please go ahead, sir.
Yeah, very good morning. So I come from a technology background, and I have known most of the technology stack right from the early 2000s, where we started with data warehousing, business objects, and all these things. So I see Hypersense more into that category, which is the underground level and flavored with Hadoop and AI, obviously. From my perspective, for growth of the company, what I see is how well connected is our sales team as compared to the product team. Because from my knowledge and from my experience, a good sales team can definitely make an average product look good, whereas we do have a good product, but I see somewhere we are lacking on the sales front. That's one thing. And my second question is, most of the companies which went 10x, 8x last year in a similar segment, they have good connects. As I again come back to the sales team, and I have seen that they have been getting projects from the government of India as well. So do we have any connects over there? Are we getting into any major 5G projects with any of the big names going forward? Can we expect some big turnaround in Subex with regards to the sales team? Thank you.
Okay. Look, I think on the strength of our relationships, we have been very, very strong with the CIO and the CFO organizations of telcos. that, as you can appreciate, with Hypersense and the wide and the platform, we are today able to appeal to a lot more constituencies within the telcos, like the CMO, CTO, and chief digital officers and things like that. Now, those relationships are that we have to build, leveraging the existing CFO and the CIO relationships that we have today. So earlier we were working on a very niche area of revenue management, which was more towards the CFO as a business user and CIO as an enabler. But now we have to appeal to a lot more, or we can appeal to a lot more within the telco aspects. Now, those are the efforts that we are building. We have augmented the team with the people who have got that experience into selling into those CTO organizations. We have augmented the team, and wherever required, we are also making the changes to ensure that in the specific accounts based on what we achieve, we want to do that. It's a work in progress because, as I told you, I'm talking specifically about telcos at this point in time. We expect that as we gain more and more traction on the Hypersense, you will see a lot more new logos coming to us along with the existing side. So I think that is a work in progress, and we have augmented the team. And at this point in time, in the regions that we are strong, we have very strong contacts, and our sales team is probably very well engaged. Now, the areas that we are significantly stepping up our effort is in Europe and North America, where we have primarily we were working with very large telcos and with on small range of products. And again, with Hypersense, we have an ability to engage with a lot more customers on a lot more areas. And there we are augmenting the team by adding more business development teams and putting more people on the ground. We are also leveraging mainstream partners of very large size. And we are also engaging them so that some of the large transformational projects we can play a lot more than what we were earlier playing in the market. So that's my view on this. We are stepping up our effort on the engagement both on these new areas and by having more feet on the ground.
Thank you very much, Mr. Vinod. And I fully support you. We are totally going to back you as an investor. I see a definite revolution coming ahead in Subex. So all the best to you and the team.
Thank you very much.
Appreciate it.
Thank you, sir. The next question from Mr. Rishi Aneja from Deep Dive Equity Research. Please go ahead, sir.
Good morning, sir. How are you? Thank you for giving me this opportunity to have a question with you.
Thank you.
I've been looking at top line since December 2018 till this quarter. Your number are continuously hovering around 80 on an average basis, 85 to 90 crores only. Whereas we have seen numbers of contracts and tie-ups during this periods. And those contracts has been get materialized or being continued or in reflecting your sales number. To name a few, we have been seeing on February 2019, we have won a ROC contract from Oman, Florence, Arizona partners with Subex to cyber secure on August 18. BTC contract gain in 2019. 6-year contracts from VodafoneZiggo, Econet Wireless from Zimbabwe, Florence in June 2019, Rhino Niger in July 2019, Viva Kuwait September 19, ROC fraud manager contract from Javel in January. There are numbers of contracts, but your sales number are still hovering around 85 to 88 crores only. Only 2 quarters are exceptions, March 2019 and it was...
Yeah, look. I think if you look at our business today, I think about 35-40% of the business comes from the new projects that we execute. When I say new projects, it's also projects from existing customers and new projects from existing customers and new logos. So some of the things that you called out are the revenues that are sitting in the 40% of the revenue that we report on an ongoing basis. Now, I guess the point that you're making is that why the numbers are not going beyond the let's say about 12 million revenue level. Now, that is where I think some of the new areas will have to start trickle. The revenues will have to come in from those new areas. Yes, this quarter has been a kind of an exception in the sense that we are faced with some challenges on initiating some projects. Things would have been very different if that wasn't the case. But we are tending towards the number that you mentioned about one of those FY19 Q4. But we'll see as we get into Q3 and Q4, probably some of the things will become more clear to you.
Sir, we have seen selling from your side also on 22nd June 2021. When the share was at the peak. So aren't you still bullish on your company itself, or you sense it like this quarter won't be good and you have sold your stake also? And we have observed that this ESOP has been used to just cash in on employees are just cashing on their opportunity.
Okay. Look, yeah. So we have some, just because you're asking, we have some restrictions on how much we can sell and how much we can exercise during the period. And we, as you know, because of the blackout period, the period is only available for about 45 days or thereabout in a quarter. And we have put an internal restriction, just internal best practice that we have put that we can only sell 100,000 shares even if you want. So there were some cash flow needs based on which that happens, and that's why you will see that concentration happens during only that 45 days, and you will see that it happens only in 100,000. These are some of the internal restrictions as a best practice we have put in place. So this is purely on the cash flow needs, and I still have a lot of ESOPs with me, and I intend to convert that as we go along.
So we have also seen one announcement from your side.
Mr. Aneja?
Yes.
I'm really sorry to interrupt, sir. Do you mind coming back in the queue?
All right.
Thank you, Mr. Aneja. Our next question from Mr. Manohar Ginu from Nokia. Please go ahead, sir.
Yeah, thanks for giving this opportunity. Vinod, I got answers from some previous, so they already covered. But just I want to ask you one more thing. And what are the gaps we can figure out from with our competitors? So what is your plans on that?
See, I think on the competition on the base and our core products, if you are talking about, there is this the whole Hypersense, the whole way we are engaging with the customers with a ongoing update and a Mac-based architecture. It's a completely forward-looking and it is creating a lot of excitement in the market. So that's a big differentiator that we have created at this point in time. On the new areas, for example, on the IoT OT threat, we are developing that threat intel based on our extensive honeypot. That's something which we are constantly investing to ensure that we have more and more coverages of OT and IoT devices. So that will be again a competing thing. On the ID Central, particularly with respect to the opportunity in India, as you know that India, most of the RBI has recently cleared the video KYC. So these are all moments that we are taking advantage of, and we are working on that area of onboarding and on identity analytics. So these are all things that we are doing, and at this point in time, our accuracy is much better than some accuracy of some of the other internal tools that the customers are using. So we are on a constant basis trying to differentiate ourselves and increase the accuracy by improving the algorithms and the AI models that we are using, and that will be our differentiator. Second, particularly your question about the opportunities in India per se, we have started pursuing it. Like for example, ID Central is predominantly on the Indian, focused on the Indian market and the Indonesian market, and we are making good progress there. Some of the logos that we have is very good. That our page companies on the crypto and on the fintech space, and they are growing, and we intend to grow along with them. So India is going to be a big part of the market that we focus when we talk about ID Central and IoT segment. On the 5G, our current focus is predominantly on Europe and North American customers because that's where a lot of actions are there, and we'll take those. We'll engage with the customers here where as and when there is an opportunity. But currently most of our activities around 5G are happening in North American and European customers.
Okay. Thanks, Nath. I have one more question. And I see a quarter-on-quarter basis there are expenses are increasing significantly. And so is there any other investment plan on that expenses or what?
Yeah, so the expenses, the movement for the expenses in the current quarter I had explained earlier in the call. I'm not sure whether you listened to it. I think we had explained there were very specific reasons which were there, primarily contributed by Forex and some additional investments we're making for the demand pickup we are seeing in the market. Apart from that, I think our investments for the newer areas will continue to keep making those investments in the newer areas like ID Central and OT security, which Vinod spoke about. So nothing unusual. I think we will continue to do what we have been doing in the last couple of quarters. The specific movement in the other expenses you see is influenced by 2 or 3 factors which I spoke about, and don't see that going up significantly in the coming quarter.
Okay. So how about for the next quarter? So is it very less compared to quarter 2 and quarter 1?
No, so I think as we explained earlier, we are not getting into quarterly or yearly guidance at this point in time. I think we will continue to keep you updated as we report each quarter, but we are not getting into specific guidance at this point in time.
Okay. Okay. Thanks. Yeah.
Thank you, sir. Ladies and gentlemen, that would be the last question. Now I hand over the floor to the management for closing comments.
Okay. So thank you for all the interest and all the questions there. As I said, while Q2 have definitely not been in line with expectation, I think the order book, the robust order book, gave us the confidence that we are on the right directionally. We are on the right path, and we will continue to focus on the execution, particularly around the new areas, and we are scaling that up. We also thank you for your continued interest in Subex. And if you have any further clarifications, then you can reach out to us at investorrelations.com. Thank you again, and stay safe and take care. And wish you all a very happy Diwali as well. Thank you very much.
Thank you. Happy Diwali to everyone. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good day, everyone.
Your conference is no longer being recorded.